joined today by John Welborn, Executive Chairman of Fenix Resources, one of the only fully integrated iron ore miners on the ASX. Thanks, John, for your time.
Nice to be here, David.
Firstly, you're a shovel to port operator. What advantage does that give you in this game?
So Fenix is an integrated iron ore miner in the Midwest of Western Australia. The advantage of that pit to port business is that we have a mining business, our haulage logistics business, and our port services business. It allows us to control the full value chain, which is very important in managing our costs and our volumes.
Talking about volumes, your guidance is 4.2 to 4.8 million tonnes for the full year. You've had a record quarter. Are you on track to hit that number, or do you think you're going to exceed?
We've obviously had some challenges at the end of the quarter with Cyclone Narelle and also the fuel supply and price challenges that are an issue for everyone in the industry. But we're very confident in guidance, and we're focused on finishing the June quarter towards the middle of that guidance point, which has always been our ambition. So that's a great outcome. And you mentioned the record quarter. A couple of years ago, Fenix was operating at 1.5 million tonnes per annum. In FY25, we did about 2.5 million tonnes. As you point out, this financial year, we're aiming for a midpoint of 4.5. So observers and shareholders can expect that we're going to hit record quarters regularly, particularly with our ambitions in the future to get ultimately to 10 million tonnes a year. It's an exciting time at Fenix.
Plan to come on by 2031, which could lift you to 10 million tonnes per annum. What's the pathway to get there?
The transaction with Sinosteel we announced last year does provide us the opportunity of a 30-year exclusive licence to mine 290 million tonnes of direct shipping ore. And that is the key driver of the pathway. Currently, we're producing 4.5 this year. We're aiming for 5 to 5.5 next year and 5.5 to 6 in FY28. And then the ramp up to 10 million tonnes begins. The pathway there is an incremental development of our existing project. So we're starting with the Beebyn Hub. We're installing a new crusher there that will give us the combined capacity to ramp up to 10 million tonnes. The really exciting thing about that project is the opportunity to significantly reduce and reset our cost base. That's driven by the construction of a private haul road, which will reduce our haulage distance by 100 kilometres and allow us to run much heavier gear. So the pathway is not just around getting to 10 million tonnes of volume. It's about reducing our C1 cash costs from its current levels of around 75 Australian dollars, FOB Geraldton, to what the scoping study outlined was 55 Australian dollars, FOB Geraldton. So the key pathway is the construction of a private haul road, and that's something that we're aiming to get approved in the next 18 months, and then we'll take 12 to 18 months of construction, which gives you that target timeline of FY31.
Iron ore pricing has been relatively volatile over the last 12 months. How does your integrated nature and the quality of the product buffer you from some of those price shocks?
Fenix's ability to control an integrated supply chain gives us the ability to manage and control the costs across our mining, logistics and haulage business. I think the iron ore price has actually been incredibly resilient over the time period you mentioned. It continues to outperform analyst forecasts. Today it's $108 a tonne. That's a fantastic price for Fenix, given the cost base of our current business. We remain profitable, and we have the opportunity to make the business far more resilient with that pathway to greater volumes and lower cost.
Where to from here? What should investors be focused on from the Fenix business over the next 6 to 12 months?
Continuing to look at our quarterly production, our ability to manage costs, and obviously the definitive feasibility study that we're hoping to outline in the second half of this year, and that pathway to be a significant global producer.
A fully integrated producer, controlling its own destiny, making money with significant growth ambitions. Exciting times ahead for Fenix and its shareholders. John, thanks for your time.
Thanks very much.